us with some details, because we also have limitations in what we can provide. But of course, the reason we're doing this is because we want you guys to get the information out there. So yes, it's not just about the refugee community, but other people can also benefit from this same information. As you did mention before, even Americans did not know about credit, and still with investment then many
same
people
thing.
thank you so much
So
to all those who are watching us, and we are recording this video here at the university. I don't think we have to go through all the introduction like we did before,
right?
But this time we'll be talking about investments. Jinsi ya kumultiplier pesa uko nayo, ways of gaining more from the money that you're having. And if I'm to simplify the whole investment thing, but again, the friend of our community here, Eric, who is with us, is a traveler and also an investor, and he has an enormous experience in the field of investments, and we thought it was very important to again come back from the previous since we last made the previous video. I know many have reached out and said it was really very important in terms of them understanding the whole concept of credit.
Sure.
So today we're actually diving into investment, and we'll be talking about the stock market, crypto, and the 401k plans. So stick with us. If you have any questions, for those following us live on Facebook, make sure you leave the comments, and we'll get back to those questions probably in real time if that's possible. And also, whoever will be following a video on YouTube, please make sure you
like and share.
Make sure you like and share. Yeah.
Subscribe.
As a way of giving back, so we
can.
can get some energy to bring you more content next time, right?
Yes.
So yeah, Eric. Today we're talking about investment, and investments. It's a very big thing in this country.
Absolutely.
Everyone wants to make a buck from his money.
Absolutely.
And most of what people would rely on is opening up savings accounts and things like that. So with investment, the stock market, crypto, 401k, why do you think these three in this case are different from just having having to open a savings account? Yes, yeah.
That's a great question. And so there's a lot of people. My grandmother is really good at stretching money, right? She could take $100 and stretch it out for a week.
Mm-hmm.
She will admit, though, she's not good at growing money. And what investing is all about is taking that $100, putting their money to work for you, investing it and growing it. So taking that 100 and growing it into 200, then taking that 200 and growing it into 500, and so on and so forth. So that's the importance of investing. Don't get me wrong, having a checking account, having a savings account, that's a foundation, and that's very important. But that money sitting in there, it earns practically nothing. And saving account rates, you don't earn much. I mean, I think there's even the most competitive savings accounts right now are at 2%.
Mm-hmm.
Where if you look at the Dow Jones Industrial Average on the stock market in 2017, the total returns were over 25%. So it's just a no-brainer. The stock market will give you the ability to grow your money much faster than a savings account. In a checking account, there is no growth. It's a safe place to put your money, but it's not going to grow.
And I think, I don't know if this is right to say, with savings accounts, you earn from that small percentage that the bank offers you, right?
Right.
And it's a percentage growth that is annually. It's based on a per year basis, right?
Yep, it's based on that, and it's based on how much you have in your account. So obviously, the more you have in your savings account, the more interest you're gonna earn.
Okay.
However, I know people that have quite a bit of money in a savings account, and they earn very little. That's because the interest rates are not that great right now, and so a savings account isn't the best place to grow your money.
Okay.
I'm not saying you shouldn't have a savings account. I think they serve their purpose, and there's a role for them. I'm not trying to demean a savings account or talk anybody out of having one. But if you want to grow that money, and like I said, and build that foundation that you want to be able to hand off to your kids and your grandchildren, investing is the way to go.
Okay. And now some might argue that when you invest, you earn based on how how well the stock market is doing.
Sure.
And if that's true, they'll think maybe opening up a savings account would save them a lot of money, because they know what the interest rate is, and how long they keep the money there. They're pretty sure of like how much they're gonna earn at the end. In this situation, like how would you convince someone to say, hey, no, that's not just like working. The best way is to go with investing in stock market or the rest of these other plans.
Sure. If anybody out there, if any of you have $1 million, $2 million, $3 million, then maybe a savings account.
I mean, a lot of our friends might have like $1,000.
Amen. And then that's my point is, a savings account, if you have a lot of money to put into a savings account, then maybe that's the right move, and it can grow and it can get that interest. But if you're working with only, a couple $100 or $1,000, you're not going to earn anything. It's just going to sit there. It's not going to earn hardly any interest. You might get 20 cents a month. Whereas you invest that $100 in Apple, and it's going to turn into, something tangible, something that you can, something decent.
And the other thing is, I think with the stock market, it's sometimes daily, or it could be like weekly, and you might even see in real time how your money is growing, right?
Oh, that's one of the most exciting things about it, is you can check your portfolio and you can see how much you've made, and per day, per week, per month. And let's not, let's be truthful here. It doesn't always go up. In a perfect world, the stock market would always go up, but sometimes it goes down. So you do sometimes lose money. But if you look at the charts over the past 20 years, 30 years, it's gone. It's going like this. And so, it's a no-brainer. You got to be invested in the market to some capacity.
So yes, followers, it's about investment, and thanks so much, Eric, for that brief clarification there on you've just made it clear that it's not the best way to open up a savings account, but it's better to invest in stock market or these other forms of investments. So let's dive into like the real stuff. So the stock market. What is the stock market?
So the stock market is basically U.S. companies and the health of and the growth of the U.S. economy. So the three main indexes that make up the United States economy are the Dow Jones Industrial, which are the 30 biggest market cap companies. So basically think of it as the 30 biggest companies in the United States. That is the Dow Jones. The S&P 500 is the 500 biggest companies, the following 500 biggest companies in the United States. And then you have the NASDAQ, which is the biggest technology companies in the United States. And you put those three markets together, and that pretty much makes up what most people think of as the United States stock market.
Okay. And so this you've made it clear like what the stock market is based on the way you've decomposed it here: the Dow Jones, the S&P 500, and the NASDAQ. Is there any specific advice you'd give to someone, like in terms of like choosing where to invest? Because maybe someone might be confused. There are now three, and should I dive into like the Dow Jones? Should I do S&P 500 or the NASDAQ? Is there any specific advice that you would, give to someone?
That's a great question. And so first I got to say, I'm not a licensed financial advisor. I do a lot of investing personally, and I do have helped family and friends with their own investments, but definitely consult a financial advisor before making any huge decisions. With that being said, S&P 500. I'm going to tell you guys exactly what Warren Buffett, the famous billionaire investor, one of the richest guys in the United States, has said, and that is invest in an index fund.
Right.
So I would caution any of you who are new to investing, I wouldn't say invest in a single company. You could make a lot of money off that, but you can also lose a lot of money off that. The safest investment is to buy the entire S&P 500. So if you buy an index fund, it's basically like you're investing in all 500 of those companies. In my opinion, that is by far, and Warren Buffett would agree that that's the safest investment. And you can buy index funds if you think technology is the way to go, then you can buy the NASDAQ index fund. and you're investing in all those technology companies as a whole. So you're investing in Apple, you're investing in Facebook, and so on and so forth. Dow Jones, if you think that the biggest companies in the United States are going to perform the best and the top, the biggest 30, then you can buy the Dow Jones index fund. And, that would be my recommendation.
Okay, cool. So people, again, stick with us. There is a lot of very important information that Eric is dispensing for us today here. And this is very practical. You can actually do it. So take his advice very serious, and you'll benefit from most of the things that we're talking about today. Now, Eric, the other question is there a limit on how much one would invest in? Because I think the fact that we have these three that you've given us here, the Dow Jones, S&P, and NASDAQ, someone might say, how much will I invest in? Is there a limit? Can someone invest with $1, $2, $3?
That's a great question. A lot of the new apps that are coming out, I believe Robinhood is one, where they're actually they're opening up investing to smaller investors, to normal people that don't have, 10,000, 20,000, 30,000 laying around. You can download one of these apps and you could buy a fraction of a stock.
Okay.
So if you only have $5, you can buy a little bit of Apple, or you can buy a little bit of the S&P 500. You wouldn't need. Right now, I think Apple stock is trading at like $260 or something like that. So in order to buy one share of Apple, traditionally you would need at least $260 just to buy one share. But with a lot of these new apps that are coming out that you can download, if you only have $5 or $10, but you still want to invest in Apple and you think it's a good investment, you can buy a fraction of it. Very similar to how they do with crypto and Bitcoins and stuff like that.
Okay. So you don't need all the money. You don't need maybe $1,000 or $500, because that's what generally people think.
Right.
Investing in stock market needs you to have a lot of money, but there is that possibility. You can have a very small amount of money and you invest that as well, and you'll still make you'll make some money out of it. It's gonna depend on how much you do put in, but I think you've also clarified that there is always that the size of stock that the company is selling. For instance, you've said Apple can, you need to have at least a minimum of 200 and
about $260.
$260 to buy at least the stock. But if you don't have that, you can buy a fraction of it, which could be any amount less than 260.
And you made a good point, but for the longest time, if you didn't have that 260, you weren't able to buy Apple.
Okay.
So these new apps and these new companies that are coming out, which is revolutionizing investing in a very good way, it's opening it up to the masses,
right,
to the people. It's allowing regular, normal people who aren't rich, who only have maybe $100 to invest, that it allows them to get in and get invested and to start, growing your money. And, you got to start somewhere. So don't be discouraged. I think with my investing, I started with $300, it wasn't tons of money.
Tons of money. Right. And, you probably did that before. So you probably made some good money out of that. When was that?
Oh my gosh. That was 10 years ago.
Okay.
About 10 years ago.
So, So that means Eric has really experience in this stuff. Doing something for at least 10 years is, pretty good, So yes, the other question I would have is, now that we've looked at the three biggest stock market groups, can someone do individual company investments as well?
Yes, and this is what makes me excited, because this is where people can really make a difference. I encourage you all, look into these companies. Make sure they're ethical companies. Make sure that they align with your values. See what companies are doing. See which ones are the best for the environment. See which ones have the best technology. See which ones that are, whether it be Tesla and electric cars, or Solar City with solar panels, or maybe natural gas. You think natural gas is a cleaner burning fuel than oil, whatever. Or maybe there's a CEO that you like that donates a lot of money to your favorite charity. Use that money and reward those companies. Reward these companies for doing good, because guess what? They listen to shareholders, and that's power. When you take that hard-earned money and you invest it with a company that shares your values and that shares your view of the world, Man, that's powerful. So
I think that's a very important point. I didn't think of it, but investing in something you're passionate of helps that boost that company, because you're actually giving them money. You're contributing towards their capital that they're investing to make money
and their development. And so, absolutely, you're a part of that. And that's what's so cool about investing is, you invest in, say, a drug company that makes a cure for a disease. You're a part of that as an investor. Or you invest in a company that's going to revolutionize renewable energy. I mean, as an investor, you're a part of that. You're helping fund that progress and those research and development and all that stuff. And that's what I love about investing. And I spend a lot of time researching companies and looking at the most ethical ones and making sure I invest my money with the most ethical companies that are best for people, for the environment, for the world. And those are the companies you want, because those are the ones that are going to thrive. The companies that aren't about that, they're the ones that are going to fall by the wayside and not make you money anyway.
Yeah, so it's not just about investing and making money, but being part of the solution. And I know Eric speaking to this is he's partly involved with some. He's a very responsible citizen. He's very helpful to most vulnerable communities, and he knows when he talks about investing in companies that are beneficial to the society and also environmental preservation, because not the environment. People like Bernie who are saying the environment, like global warming, is like the biggest threat to this country and the entire world at this moment. So it makes a lot of sense. I think that's a very, very big point, and I do have respect for that contribution you've made. It's a very big point. I think we have to invest in things that are useful. We're all up to making this world a better place. So yeah, making those contributions really is very important. And again, it enhances your values.
Absolutely, it makes you feel good, and yeah, invest in what you're passionate about. And whether if it's Apple, if you love Apple products, invest in Apple.
Invest in Apple.
If you like Android, if you think Google and their AI and their motto, do no evil, you think they're a great company, invest in them. If you don't invest in them. Don't give them your money.
Give them your money. So if we can switch to crypto.
Okay.
Let's talk about crypto.
A lot of people want to talk about crypto these days.
I think I told you last time. There's this girl who sent me a message. Ushu, can I buy some? What was that again? Can I buy some bitcoins?
Right.
And I was like, hold on a second. I'm not gonna say yes because it's a win-lose situation, but I'd think it's a good idea buying a couple of bitcoins and see how it does. But I responded with a lot of reservations because I did not think it's the best way to invest her money.
Right.
But now, what would you say about investing in crypto?
So it's a great question. Crypto it's very new, and with anything, I think it has the ability. I think the technology behind crypto could revolutionize and change the world in a lot of ways. I think one of the biggest ways it could do that is with transferring money. I don't know if any of you have tried to wire transfer money to another country, but it's a pain in the butt. It's a long process, it's an expensive process, and there are certain cryptocurrency technology, Ripple is one of them that comes to mind, that is looking to solve that problem. And they actually have huge investments from American Express, which is a huge financial company in the United States,
right,
that is looking into this crypto technology to use it to transfer money overseas instantaneously. So something where I tried to transfer $200 to a friend in Finland, and it took 2 weeks to get there. And it was a mess, and it was expensive, and yeah, there were issues with her bank and my bank, and where, American Express and Ripple, which is a cryptocurrency company, what they're trying to do is develop a system that you click a button, and it goes from the United States to Finland in the blink of an eye. So there is technology there. There is uses, but being that it's a new investing platform, it can be susceptible to hackers. The SEC, which in the United States, it's called the Securities and Exchange Commission. And they are basically a government entity that's a watchdog, and they regulate Wall Street. So if any of these companies are doing illegal things, insider trading, or if they are doing anything to harm the investors, the SEC will prosecute them, come after them, and it keeps a level playing field, and it's just a protection for your money, if you will. There's none of that with crypto right now. The SEC is looking into cryptocurrencies, Bitcoin, Ethereum, all that stuff. They're looking into trying to regulate it, but it's going to take a little time. So I would say it's not a terrible investment, but it's not the safest investment. And a lot of these platforms for cryptocurrency have gotten hacked and have stolen a lot of money. And guess what? If that happens, your money's gone. So say you put money into a bank account, it's insured by the FDIC, by the government, for up to $250,000. So if the bank goes bankrupt and you had $50,000 in the bank, you don't lose that money. It's insured. If you haven't invested in crypto, if you have $50,000 and someone hacks into that account and takes it, your money's gone.
Your money's gone.
Money's gone.
So there is no security in terms of like investing in crypto, if if I understood what you've said, because if it's not insured by the FDIC, and again the government regulating agency that you did mention, it doesn't have a say over crypto, then I think it's just a win-lose situation. It's something to try out, but it has some risks, right?
It has some risks. I will say I have cryptocurrencies. I'm invested. I have a little bit of Bitcoin and a little bit of Ethereum. And when I say a little bit, like $500 worth, I don't feel comfortable putting a lot more than that. Mm-hmm. I believe in the technology, and trust me, it's going to be on the stock market in the near future. You're going to be able to buy it on the stock market, and it's going to be much more secure and much safer to invest in. If you want to invest in crypto right now, I would suggest an easy app to download on your phone. It's called Coinbase, Coinbase. You could link it to your bank account, and it's fairly safe, and I think it's the safest one. That's the one I use. You could download it on the Play Store, App Store, and yeah.
It's called Coinbase?
Coinbase.
Yep. So Coinbase is the app that you can download. There may be other versions, there may be also other apps that you can use to buy the crypto. But before I actually forget, I just wanted to ask this. Some people only understand crypto as electronic money. What does that mean, electronic money?
So how you earn crypto tokens, or coins, they call them coins, is you mine them. And how you mine them, so it's not like people in a field digging and mining and in like a mine looking for silver or gold. It's computers. It's supercomputers that are constantly, and there are people, I've met people. I met a young man in Canada. He rented a huge house and put massive computers in the house, and all these computers did all day was search for Bitcoins and run through the internet looking for Bitcoins. And that's how you mine Bitcoins. It's a computer, so you need basically not supercomputers, but you need a lot of computers, a lot of computing power, and they run through the internet, and they hide these tokens throughout the web.
Okay.
And you use these programs. I mean, Bitcoin is very... There's not too many people that fully, I would say, can understand Bitcoin. And I'm not going to pretend like I fully understand Bitcoin. I don't fully understand.
Well, we don't have to understand it here. We're not like diving into the specifics of Bitcoins.
Right.
So thank God, at least we're trying to avoid that. But we're about investments. So again, stick with us. This is Kyangwali News, the Refugee News. We are with Eric here talking about investments. And here we're discussing stock market, crypto, and 401k. Any questions from people on Facebook?
Not yet.
Okay, good. All right. So with that in mind, let's get into something that you're really very passionate about, which is I think the retirement plan, something like that. The 401k.
Let's get into it.
I know many people who are working and when they're presented with paperwork and the company says, you guys should you should buy plans with 401k here, we're offering it, people are like, oh my gosh, we don't know what that is. And me myself, I've been a victim, like we've been talking about this like off camera, and I told you like how the company came and they said, you qualify to be on 401k plans, and I didn't just know what it was. So I was worried, like, filling out the paperwork and having it start running. Now, I mean, what's the whole thing? What's 401k and what's it all about?
Absolutely. And you know what? This is probably the most important topic that we're going to discuss today.
Okay.
And the reason it's going to be that is because for the majority of people, the vast majority of people,
right,
that is the first way that they start investing in the stock market, is with a 401k. Basically, a 401k is an employer-sponsored plan that allows you to take money from your paycheck and invest it in the stock market. It's completely safe. It's not a scam. And most companies, and this is the biggest thing, they'll offer what's called a company match. So when I worked at Bank of America, after you worked at Bank of America for 1 year, you became eligible for the company match on the 401k, which was 5%. Meaning, Bank of America gave its employees 5% of their salary every paycheck for free. Free money.
Free money.
Free money. Free money. So you put your 5% in. So let's just say, like right now in my 401k, I put 4% every paycheck. That comes out to $70. So at that 4%, if my company matched that 4%, that would be $140 a paycheck.
Wow.
So 70 of my money, and then the other part of it from the company, completely free.
Free. Okay.
Free money. And there are so many Americans that are passing up on free money. When I worked for Bank of America, my cube mate, awesome guy, I begged him. I said, Tom, are you putting into your 401k? And he said, no, I don't want to. And I said, like, you're passing up on free money. That's 5%. And, I get it. Like, I didn't know what his financial situation is at the time. Everyone's got their own stuff going on.
That's right.
Put in what you can afford. And that's the best thing about a 401k. If you just want to put 1%, 2%, you could put up to 15, 20% if you can afford it. But it's important. It's the way most people start investing money in the stock market and start growing their money. And the most important thing is the earlier you start investing into a 401k, the longer you give your money time to grow, and the more you're going to have for retirement and eventually, to pass down to your next generation, your kids.
Okay, so quickly, like, what's the difference between the 401k and the crypto and the stock market that we've just discussed before?
That's a good question. So the stock market is the companies that you invest in. A 401k is a form of investment into those companies. So when you put money into a 401k, you're investing in the stock market. And then cryptocurrencies is just a totally separate investment strategy that is a brand new, it's basically the cutting edge of investing is crypto. But so 401k and the stock market are very similar. There are no 401ks that allow you to invest in crypto. 401ks, you can invest in the traditional stock market. So you can buy what's called a mutual fund, which think of it as like a basket of stocks. So you can pick a mutual fund that might have Apple, Facebook, Amazon, and Google. And you put money into that, so you are investing in those companies.
Okay. Well, that's clarified. But the other question is, what if your company doesn't offer the 401k plans? Is there a way to get it from somewhere else?
Sure. There's what's called an IRA. And I have one of these personally. So I have a 401k and I have an IRA. An IRA stands for an individual retirement account.
Okay.
You can open it with just about any financial institution. I like Fidelity. I think their customer service is great. But Fidelity, TD Ameritrade, E-Trade, just to name a few, Edward Jones. And so if your company doesn't offer a 401k and you still want to invest money, you can open up an individual retirement account. Or like I said, if you don't have tons of money to invest, but you still want to, you got to start somewhere, you can download one of those Robinhood apps. And even if you just want to do $5 a week, $5, $10 a paycheck. But I challenge you guys. I mean, the earlier you start, but once you see how fast it starts growing and that 5 turns into 10, turns into 20. You'll see how much it's worth it for sure. I assure you.
Okay, and then what if like you get the plan through your company and you happen to leave? Is there a way to transfer this to another company, or you lose the money? Like what happens?
Great question. No, that money is yours. Any money that you put in there is your money. Any money you deposit is your money. Now, the company match that, if the company matches your money, for a lot of employers, there's a certain time period it's called being vested in your money. So a lot of places you have to work there for maybe 5 years in order to keep all of that. So when I worked at Catholic Social Services, I think they matched 6%. And I worked there for 3 years. So the money that they gave me towards my 401k, I believe I was able to keep half of that.
Okay.
And the other half went back to them. But if I would have stayed working there for 5 years, I would have gotten to keep the whole thing. The whole thing. But no, that is your money. That's a great question. What you basically do from that point is you take that money and you roll it over into a rollover IRA, which is an individual retirement account. And from there, that's your money. If you want to put it in your bank account or savings account, you can. The only thing you have to do is there's a 10%, you got to pay taxes on it.
Taxes, okay.
So any money that goes into the 401k is tax-free. It's tax deferred, so you don't have to pay any taxes on it.
401k.
Or 401k, I'm sorry. And then if you try to take it out, you just have to pay taxes on it.
Oh, this is very interesting. So, like when you're making this, when they're taking the money from your paycheck to the 401k, it's tax free.
Right.
When you get the money from the 401k, it's taxed.
If you put it in your bank account.
Oh, okay.
If you roll it into another retirement account, like an IRA, it remains tax free. You don't have to pay any taxes on it.
I see.
But now an IRA, it's an individual retirement account, so you can't access that money tax-free until you're 55. So you can still take the money out. So say something happens, you need to buy a car, you need to fix your car, and you've got $5,000 in an IRA, and I've done this in the past. You can take that money out and transfer it into your bank account, no problem. You just have to pay a 10% basically tax to the government on that money.
But there is that possibility that you can keep the money there up to 55.
Yeah. If you don't need the money, ideally you want to keep it there till you're 55, and you won't pay any tax on that money. And then once you retire and you're of retirement age, you can start taking it out, no penalties, nothing.
So why 55 and not 60, not 62? Why at 55?
55 is when you first can start taking it.
Okay.
But if you're financially comfortable, or you want to say, hey, I don't want to touch the money till I'm 60, then you're more than welcome to do that. But that's the earliest age that you can take it without paying taxes on it.
Okay.
But let me tell everybody, I don't want to discourage it. You can, it's your money. You can have access to it, and you could transfer it to your bank account. You'll just have to pay the taxes on it.
The 10%, yeah. So, like, correct me if I'm wrong. It's like the 401k as an investment is a way to save for your future. It's a retirement plan, but it's the company that you work for that is investing this money into the stock market so you can earn from it.
Yes.
Is that correct?
Yeah. So usually it starts off as your money that they take out of your paycheck, and then most companies will match you. Some companies it's a 3% match, some it's a 5%, some it's 6%, some are even higher than that. So it's important to find out what your company matches. So let's say your company matches 4%. What you want to do is at least contribute 4% a paycheck into that, because you want to take advantage of that free money. If you only contribute 3%, well, guess what? Your company's only going to match you on 3%. So you're losing out on, one whole percent. So 1% is usually 1% of, what you make. So, I mean, it's usually like $15, $20.
$15, $20. I was just thinking here, now, like, we've talked about this, like, it's good for young people. Like, you got to start when you're young. Now, like, from our community, we have people who are in their 40s, their 50s, and even the 60s. And they might be interested in this information, and they might be like, we're going to invest, man. Do you think they shouldn't do it because they are older, or it's still fine, they can still invest in
Well, I believe I read a study. Most Americans don't open up a 401k till they're 35.
Okay, so
That's
encouraging.
I know someone close to me who didn't open any kind of savings until they were, I think, 50. And right now that person has over $100,000 in their 401k retirement savings. Yeah. So yeah, it's never too late to start.
It's never too late to start.
And you know what? If it's never too late to start, and you can put a beneficiary on your account. So God forbid, but if something were to happen to you, that money would go to your son, your daughter, your wife, your husband, whatever.
I know nobody wants to hear about dying, but at some point you might die or anything may happen, just like you've mentioned. And
got to cover your bases.
Exactly. Yeah. I think a lot of people are actually worried, like, doing this, or what if I die? Like, what about my money? People are so worried. They're very not informed about what happens in the world of investment here. So yeah, I think pointing that out, you can actually put someone as a beneficiary is a cool thing,
Absolutely.
If I know that I'm doing this, but if I die, my son, my daughter, my wife, or maybe one of my parents can use the money, then I think it's okay. You should dive into it,
Absolutely, and I think
it provides a guarantee.
And I feel like that's like a big fear with a lot of people, is that they're afraid that money's going to be lost. It's not. That is your hard-earned money, and God forbid if something were to happen to you, it's going to go to your next of kin, to your what. Now, if you don't have a beneficiary, typically it normally goes to the spouse. So the wife or the husband. But let's say if it's your money, so if you want to put your child as the beneficiary and you don't want to put your wife or your husband or whatever, you can put whoever you want. But if you don't put a beneficiary, your money's still going to go to somebody close to you, someone in your family.
Oh, okay, someone in your family, which is a good thing, so they can claim the money.
Right, and that's all protected. That's U.S. law. That's that you have protection there.
Okay. All right, I think we've made a summary. Thank you so much for all those who are watching. But I just want to give Eric an opportunity to basically tell us anything because I don't think I have any other questions they can generate right now. But is there any extra thing, any additional information you think people need to know?
I think we touched on a lot of bases. I encourage.
Yeah, we've done it pretty good.
Yeah, I know, but I mean, any questions, as always, put it in the comments or message Ushu or myself or whatever. And if we don't know it off the top of our heads, then we'll find the answer for you. But too many Americans are afraid of investing. It's the same thing with credit in the last video. We do a horrible job at teaching it in our primary schools and even in our universities. We don't talk about this stuff. And so many people, very intelligent people, are afraid of investing. They're afraid of it. And it's not something that you should be afraid of. It's something that you should embrace. It is a chance to make a difference in the world, like I said, to reward companies that are ethical and that are moral. And it's a way to earn money and to really build a foundation that you can pass on to the next generation and the next generation. It's such a powerful tool. And so, yes, please don't be afraid of it. Look into it. Ask questions. We're here for you. And that's it, man. God bless you all. Thank you for watching.
Yeah, this is the project, man. I think if we do have anything that is very difficult and it's beyond our contribution, we're willing to reach out to other people. So in the future, you'll be seeing more other people coming, with us, and we might be asking them questions or asking them to provide us with some details because we also have limitations in what we can provide. But of course, the reason we're doing this is because we want you guys to get the information out there. So yes, it's not just about the refugee community, but other people can also benefit from this same information. As you did mention before, even Americans did not know about credit, and still with investment there are many who do not know. Yeah,
so none of you guys feel bad. This is like it's the whole United States system. There are too many Americans of every age group, men, women, white, black, brown, that are just they don't understand this stuff, and it's something so important to understand, because it could really not only change your life right now, but change your whole family's life for generations and people in the future. And that's the most important thing.
Right, and the most important thing that I would say I've actually liked from today is the fact that you did point out that before it was very difficult for someone to dive into like investment because there were limitations on how much you'd put in, and many people did not have the money at that time. But right now, with the technology, the apps, and all that stuff, you can actually make smaller investments into the stock market or anything else, including crypto, and it's just a very beautiful thing. You know, it makes life easy. It makes it possible for even ordinary citizens to benefit from the whole investment system.
Absolutely. We're living in a very exciting time for investing. This is a good time to be alive. I mean, I've read this, maybe in all of human history, this might be the best time to be alive, and let's take advantage of it. Let's grow our money. Let's all get happy, healthy, wealthy, all that stuff. So let's do it.
So thank you so much. We've reached the end. Thank you so much for all those who'll be watching the video and those who are following us live. What I have to say is we're going to continue producing more content that is important to the refugee community, but also to those who are not refugees. We are willing to do as much as we can to see you guys get the information and use it. Most of the things that we talk about are very practical, and hey, after this video, try this out, download the Coinbase and start investing in crypto.
Sure.
It's doable. Don't think you have any limits in terms of like investments, and that's what you got to do. Again, we'll be coming back with something new next time. Thank you so much again. Thank you for being followers, and for those who have not subscribed to our YouTube channel,
subscribe,
make sure
hit those
you
buttons.
do it right now. Hit the notification button, so when we have a new video come up, you're notified and you are able to watch. So thank you so much, Eric, for being here today.
Ushu,
we hope
welcome.
we can do more, and thank you so much.
Have a great day, everyone. Thank you.